The International Monetary Fund says clouds over global economy are beginning to part in 2024. The financial agency also signaled a brighter future for South Korea's economy amid a global landscape of recovery and resilience. Shin Se-byuck reports.
The International Monetary Fund on Tuesday upgraded its growth forecast for South Korea's economy to 2.3% this year. It is a slight increase of 0.1 percentage points from the previous forecast made in October last year. The fresh outlook is an expansion from a 1.4% increase last year. This projection aligns with the OECD's expectations and is higher than the anticipated growth set by the South Korean government of 2.2% and the Bank of Korea, which forecast 2.1%. The boost in South Korea's growth outlook came on the back of the robustness of its two major trading partners, the U.S. and China. The U.S. saw a growth rate of 2.5%, while China saw 5.2% growth in 2023. Globally, the IMF anticipates a 3.1% growth this year, up 0.2 points from its October forecast, largely bolstered by the strong performances of the U.S. and China. IMF chief economist Pierre-Olivier Grinchas expressed a positive view of the global economy, highlighting its resilience and the potential for a smooth and stable growth path.
The global economy continues to display remarkable resilience, with inflation declining steadily and growth holding up. The chance of a soft landing has increased.
However, he warned that the foundation for growth was weak and that significant risks such as geopolitical unrest in the Middle East persisted, which could affect commodity prices and supply chains. By region, the U.S. is expected to post 2.1% growth this year. China is forecast to grow 4.6% in 2024, an upward adjustment of 0.4 percentage points. Japan's growth is anticipated to be limited to 0.9% as the boost from last year's weak yen and surge in consumer spending begins to fade. The Eurozone, which has been grappling with an economic downturn, is forecast to grow by 0.9%. In terms of the global outlook for next year, the IMF kept it steady at 3.2%, unchanged from its previous projection. Amid ongoing challenges, the IMF emphasized the need for timely adjustments in monetary policy, enhancing fiscal resilience, as well as pursuing structural reforms for long-term productivity. Shin Se-byuck, Arirang News.